Hello, welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. I woke up to an impressive rally this morning. It looks like Bitcoin is back over 65,000. We'll check out the price chart, and then we'll go look at spending behavior on-chain. That's always what I like to look at when we're near the all-time high. And we'll see what our various on-chain cohorts are doing at these prices. Are they staying strong? Are they looking weak? We'll answer those questions today. If you're enjoying this content, make sure to give my video a thumbs up and subscribe to my channel. We're working on making this the best on-chain analysis hub on YouTube, and your support is everything for this community. All right, enough of that. Let's get into the charts. Looking here at the price chart, when we spoke the other day, we were hanging around above 60K and we were wondering whether a direction would be established. And just in the last couple of hours, we've seen a strong rally here back up over 65,000. If I switch to the hourly chart, just look here in the last couple of days how strongly we've bounced away from this 60K range, and we're now back over 65. We mark the all-time high here. You can see we're back over that previous all-time high from April and not far from threatening the high set on October 20th. And what's really impressed me about the price chart is how little pullback there was. We had the strong rally through most of October. We hit the all-time high on October 20th and we pulled back. And while we've tested 60K a bit, here's 60K right on my line, it never really seemed like it was in doubt. And we didn't get much selling activity. This has been a very tight bull flag formation here. We got the run up, we got the pullback, and it's just kind of hanging around here. The bears just don't seem to have a lot of juice left in the tank. And this is really what I think is telling the story of what's happening to Bitcoin right now. And it'll be the focus of what we look at on chain today. What's going on with the spenders here? What are the bears doing? And how does the market look to be rebounding from this 60K test? So let's hop over to the on-chain stuff. Here is a spending behavior dashboard. So this is a view of various charts showing realized profit and loss. Up here in the top, where we're mostly going to focus, is the net realized profit and loss chart. This is the dollar value of the net realized profit spent on chain each day. So we combine all of the realized profit, we subtract all of the realized losses, and we get this green and red line here. The behavior that we notice in bull markets is that when price is increasing, realizing of profits increases, and you see an increase on this line, and then there'll be periods of pullback, of market reset. And in a proper bull run, what confirms that market strength has remained is when we get a bounce off of the cost basis line. You can see here in March, there was a little bounce here, a little tap of the red before we pushed back up and price rallied higher. This is the visual representation of a pullback in price, spending behavior declining, market entrants are less interested in spending coins, profit realization slows down. There was a brief moment where a few people realized some losses. We had a reset of weak hands, and then a bounce carried us into the next rally. Got another one of those here in April. After the all-time high, after the Coinbase stock debut, there was a pullback, a decline in spending, a bounce off of the cost basis, and another rally before the final capitulation. When we hit these long sell-off periods, the net P&L chart spends a period of time underwater. You see this burst of red here, and it just seems like the market as a whole, let me zoom in a bit more, the market as a whole just struggles to get back over this cost basis line, this break-even line. Every time they get back into profit, a few more sellers step in, and this is really a visualization of a shakeout. This is a bunch of weak-handed investors, people who are losing confidence in Bitcoin, getting shaken out from mid-May until late July. And then once the market finally gets rid of these sellers and it pushes itself back into a state of profit, it tends to want to stay there for a while. You can almost see the market sentiment shifting, where we're in extreme profit, lots of profit being realized, declining on pullbacks, spiking on rallies, and then finally in the sell-off capitulation in May, large losses start being realized. And once we hit this point, it takes a period of time for the market to reset and for a lot of these people to get shaken out. The supply starts getting absorbed, and then the price rallies. We can see since August, net realized P&L has been mostly in the green. There was a reset here in late September when we had the sell-off after these futures liquidations that we've spoken about at length on this channel. Right into late September, a few losses got realized, and then off we went. The behavior I'm really interested in right now is this last few weeks since hitting the all-time high. We've seen some slowdown in spending, a slowdown in the realization of profits. Look at this bounce here on October 27th, briefly dipping down into losses, a few people getting shaken out, and it perfectly aligns with the dip in price. The rally pushed up higher, the market dug out, we saw some more spending, some more profit being realized, and it's come back down to test the cost basis and gotten another bounce as we've rallied back over 65. The takeaway here for me on this chart, zoomed out too much, is that we're seeing positive spending activity. There's a bit more realization of profits here, not quite what we'd seen earlier this year at even lower prices, by the way. So the fact that we saw even more profit realization at lower prices, here prices in the 40s and 50s, this shows just a more calm, more muted market, less eagerness to realize profits just yet. And when we've had opportunities to test the cost basis, they've held up. So we've seen this rush up in price. We've gone sideways for a few weeks, and there hasn't been any loss realization on chain of any notable amount. The spending behavior has held up, and when we've tested our cost basis, buyers have stepped in. This is a very strong profile. It's what we'd expect to see in a bull market, and I do believe that we are in a bull market now. This just fits the profile. And you look over here, here are the realized profits and losses individually from this behavior. And you can see there's been a lot of activity of realized profits lately, but just in the last few days, prices going up, this activity is declining here. This is what we want to see. We don't want to see this value continuing to increase with sideways price, because that would signify older hands becoming impatient and looking for exit liquidity. We're not seeing that behavior. We did see a bit of loss realization up here during this pullback. Some of these folks are realizing losses. And the crazy thing about this is, for these people right here to be realizing losses at this point, they would have had to buy the all-time high on October 20th. They bought 66K, it pulled back to 60,000, and these people sold for a loss. These are short-term, weak-handed investors. This is not smart money. And frankly, we need to shake these folks out from time to time. We need to give them opportunities to leave, because these are the first people to sell when we make new prices. They're the first ones to get out. These are people buying purely on emotion and hype, and they don't understand the asset. When you see these losses being realized here, and there's not a lot of profit taking, and spending activity in general seems muted, these are likely smart money buying this dip right here. These are people who bought the top, they bought this profit realization from older hands at the top, and then a few weeks later, these people are selling, and they're selling it back to the folks who realized profit into the highs. Smart money is selling here and buying here. Dumb money is buying here and selling here. Really seeing both sides of the outcomes here on the net realized P&L. Just one more note on spending behavior. So this purple chart in the bottom right is the short-term holder spent profit ratio. So any coins spent by newer buyers get realized on this chart here. And what we're seeing is that there's been some loss realization by short-term holders in the last couple of weeks. See, they spiked up, they held their cost basis, they pushed a little bit of this rally, and then there were some losses realized here at the end of October. Now, short-term holders as a group are people who have bought in the last 5 months, which as of the time of this recording today on November 8th, those are people who bought at the beginning of June over here. So they've weathered all of this. And for them to be realizing losses here at 60,000 means that these people bought right here. So just like we're seeing some people buying the realization of profit into the top and then later selling at a loss when price goes sideways here at 60K, these people selling are these short-term holders who pulled the cost basis back down into loss. These are the same people right here. So we can see that there are always some investors who act emotionally and don't make wise decisions. These people are always present, and it's good for the market to give them opportunities to exit with some sideways price action. This is what a quality pullback looks like. This behavior here looks to me like smart money buying the dip off of weak hands. Here's our long-term holder dashboard. We'll just check in on these folks briefly. What we saw last week was that long-term holders had distributed some as we broke the all-time high. This is the behavior we look for from this group. They buy in bear markets, they sell into market strength, and they begin accumulating as price rolls over. We were expecting some distribution out of this group, and we got it. From a high of around 13.3 million coins, down to 13.25 million coins. It looks like they distributed maybe 50 to 60,000 Bitcoin out of this group, which is a tiny fraction of their overall supply. And we can see this group sold, and it manifested itself in a growth of supply for short-term holders. Some of these coins will end up maturing back into this group. But as a result of this distribution and the kind of sideways action that the supply has seen for the last month, we're now getting a few red candles on the long-term holder net position change chart. This is simply a rolling 30-day change of this line at the top. And for most of this year, it was showing a lot of strength. It really started to reverse in late January after price broke the previous all-time high and rallied up into this pullback. This was really where long-term holders did most of their distributing. If you see up here on the price chart, this is that area where they really started to sell. And once we got into late January, this group started accumulating. See here in late January, they're starting to slow down and the group starts gathering more supply. This was when selling was really being exhausted, and as a group, they became net accumulators. We're watching this group pretty closely, but I've got to say, they just seem to be patient here. We didn't get a mass exodus, a dumping of supply just as we broke into the 66Ks. This group doesn't blindly hit the sell button when we see new prices. They are strategic, and so far they seem reticent to sell. There just doesn't seem to be a lot of gas in the tank for whatever bears may exist out there right now. Here is our smart money chart. Been a couple of weeks since we looked at it, so it's worth checking back in. This orange line here is illiquid supply shock. So these are our entities, our illiquid entities, which are folks on chain who have a history of selling 25% or less of their Bitcoin lifetime. These are the hodler types. They're not favorable to selling their coin. And when supply ends up with these investors, we can have a high confidence that they will hold on to them into the future based on their historic spending behavior. And this group is approaching all-time highs in illiquid supply shock for this market cycle. They have continued to buy the dip every time there has been an opportunity, and the strength of this group is really what has propelled the market since the summer sell-off. When we hit this bottom in May and then went sideways, this group began accumulating. And this has been one of the pillars of our supply squeeze thesis and the narrative that we've been building on this channel since early September. This group is helping to drive this behavior of hodling. We are seeing a culture of sovereign custody taking root at scale in the data. And I'm very excited about this because it's different from all previous market cycles. It's a dynamic we will continue to watch very closely. This blue line here is the whale supply, filtered to remove known entities. So I took out exchanges and a few other things so that we can really just see the individuals in this group. And they have also been accumulating for most of the last few months. And the important thing to really look at is if we're seeing a large distribution event like we saw in January, that's the concern. This kind of sideways zigzag is not a material observation for us to be alarmed or encouraged about. They're not making any waves. They're just kind of going with the market here. And that's fine. These whales don't need to be spending any of their coins as far as I'm concerned. The last line I want to look at on our smart money chart here is sovereign supply. I touched on this about a month ago in a previous video. Okay, so what sovereign supply is, it's all Bitcoin not held on exchanges. So all the coin that is held by long-term holders and short-term holders in sovereign custody, in cold storage, not on an exchange, is represented here in sovereign supply. If I go zoom out, sovereign supply is at the highest level it has ever been. It does continue to grow over time, but it has moments where it reduces, and it tends to be in market strength and in large capitulation events. Whenever people are rushing to the exchanges, sovereign supply will go down. Well, because of the accumulation by our illiquid entities and by the whales and the long-term holders, all of those groups which have some overlap in them, you know, some whales are also illiquid long-term holders, some long-term holders are not whales. There's a lot of overlap, but those groups combined really form the profile of hodlers on chain. That's why we look at all of them individually individually and together. And their supply as a group is represented in this red line. And you can see it's just in a perpetual climb with price here. Since this moment back here, it has just continued to shoot up. I'm very encouraged by this behavior, and I hope that this is more of a long-term trend that we see in Bitcoin moving forward, that despite market cycles, maybe we just see more and more sovereign supply being held by individuals, not sitting on exchanges. Just kind of wrap up our story today, we'll take a look at the futures market like we usually do. We've got open interest up here at the top in USD terms on the left and in BTC terms on the right. It seems that futures open interest has stayed pretty high, but we haven't seen huge inflows in the last few days, at least not on the perpetual side. We know that in the linear futures market, there is an ETF that was released a couple of weeks ago that's seeing large volumes. But here on the perpetual side, it seems to be holding steady throughout this kind of sideways pullback. However, in the last few hours, funding has been increasing back over 0.03%, which isn't an astronomical figure. Get some context as where this stands. This is about the same level we were at in late August as this early September, actually. Similar funding rate to early September. However, we're at the all-time high, and the funding is less than it was the last time we hit the all-time high. But we know that every time there are new prices, there are leveraged long traders waiting to ape into the all-time high. This happens every time. These people are relentless and seemingly have a bottomless pit of funds to trade with. But the encouraging thing is that funding isn't as high as it was the last time we neared the all-time high, and the amount of crypto margined futures contracts continues to trend macro down. Yeah, there's a slight increase in the last couple of days. It's gone up a couple of percentage points, but generally the amount of crypto being used as collateral by these futures traders is diminishing, which means that volatility is being slowly squeezed out, slowly wrung out of the system, and the quality of the margin being used by these perpetual futures traders is higher than it was before. So while we do see more open interest than we maybe did a few months ago, funding does have a way of being very reflexive to price, sometimes at wrong times. This system has a way of correcting itself. I mean, just look over here. As price was rallying last night, back over 64K, a few people got liquidated. A few short traders got liquidated. These are people who bet on price to go down, and they were wrong. They got flushed out. They were immediately settled by the exchange, and the market moves on. So no real red flags or major observations about the futures market. It's good to see that funding is rising with price rising, but it's not going gigalong into the stratosphere. This can obviously change very quickly, but if the spending behavior on chain here that we're seeing is any indication, even if we were to see some kind of flush out, if there were some traders that geared up too heavily, they went too long on leverage and they get flushed out, I suspect that they will be quickly bought up. We've seen that behavior happen a few times in the last several weeks, and every time it has occurred, the market has stepped in. Pretty much everything on chain looks like the early stages of a bull market. All of the spending activity has tapered. Profit realization is very controlled and strategic. It doesn't seem like a large group exiting. And whenever we've gotten opportunities to test loss realization, the market has stepped in and absorbed those coins. And this has been occurring now for a few months. We are still seeing some short-term holders buying the top and selling as soon as price goes against them. These people are always around. It's important to remember that no matter how many people we know that are hodling Bitcoin, there are always some folks out there who are buying and selling it emotionally and have no attachment to this asset. Make sure you follow me on Twitter at TXMCTrades. That's where you'll find a lot of my analysis and other content, my observations day to day, and it's a great place to ask me questions about the things we talk about on our channel here. This looks like the early stages of a bull market. I remain confident that our thesis is still fully intact, and I expect that we will see higher prices in the next few days. I don't quite know what the top of the market looks like, but as you know, we will watch this data closely. We'll check back in a few days, and who knows, maybe we'll have another all-time high to celebrate. Either way, I think it's going to be a great week. Leave any questions or comments you have for me down below. I'll be sure to read them, as I always do. And please share these videos with any of your friends who are looking to find out more about Bitcoin. Until we speak again, take care of yourselves, friends, and be kind to one another. Cheers.